Hi, everyone. Good afternoon. Should be a really nice panel. We have our speakers here. Do you guys want to introduce yourselves quickly? Why don't you start, Jakub?
Sure. Thanks for having me. So I'm Jakub. I'm currently working at Redstone, which is an Oracle provider. I'm a computer scientist, programmer by trade in crypto from 2016, before the old-fashioned boring fintech. And then I was also working as a smart contract auditor. And during the DeFi summer, I was heavily playing as a degen, which is quite helpful.
Yeah, I'm Bastian Blankenburg of U2 protocol. U2 is building what we call trust infrastructure for the internet, but particularly Web3. It's based on trust signals that are computed from social relationships from users to show them relevant information when they are trying to make some decision whether to invest something into a liquidity pool or buy a token, like, okay, your Telegram contact so-and-so likes this token, for instance, and building a lot of integration points and APIs, and also using oracles in our protocol, but also providing our signals via oracles to possibly other use cases.
And I'm Daniele. I do research at Ovix. I'm responsible for modeling the safety of our lending market. That's our main product. And I also do investment strategies within our protocols.
Okay, great, thanks. I know there's been a lot of talk at the conference around different Oracle designs and different trust assumptions. So I feel a good place to start would maybe be by asking you guys, what do you feel are the biggest trust assumptions we're making today using DeFi?
Oh, first? Okay. I think it depends on the product. I think the biggest volume-weighted trust assumption we're making is custodian redemption process. This is obviously targeting stable coins, like assets like wrapped assets, especially I would say wrapped Bitcoin, since it's like the more non-native of the assets traded on major EVM chains, for example. I think that's the major trust issue. And then everything else, there's many others that come out of the specific protocol that one uses. And then here you can tie into oracles that people choose to use for their product and whatnot. But I would say custodian redemption processes are one of the biggest trust assumptions that people make in DeFi.
Yeah, we already had a couple of discussions here, talks and panels mentioning that, okay, what is actually truth supposedly written onto the chain, determined by some oracle, maybe multiple data feeders, etc. At the end of the day, as U2, we believe that different users, different institutions have different ideas about what they consider trustworthy or as truth, or maybe as a signal for truth at a certain point in time. And we are building our own signals with that in mind. So we say, okay, we do not want to tell you who to trust. We want to give you information to make your own decision based on what we think is relevant here to consider at that point in time. And therefore sort of decentralizing that idea. So decentralizing really the decision whether to trust something or not. And I think that's very much in line with the original idea of using blockchain in the first place. So I think, yes, it is of course sometimes necessary, cost or computation-wise, to aggregate something, whatever. But then if you do it, then you should be very transparent about it. You should be transparent about which data sources you use, where that comes from, etc., how it is aggregated. That was also mentioned before here. So basically enabling users to actually make that decision to see, okay, this data point has been arrived in this way from these sources, and then make the decision whether to trust it and whether to trust the action that is then dependent on that, okay, be it some liquidity pool action or it's just some price feed for a pool or whatever, and then you can see, okay, that's reasonable to me, I'm going to use it or not. And I think that, just making that very transparent, enabling the users to first understand what's happening and then really making their decision themselves.
I might add something. So we get trust on different levels. So I think first of all we trust in the technology, and obviously we are humans. We make mistakes, so we can have audits. We can have some face-off mechanism to use a redundant way of data transfer, etc. And obviously we trust the mechanics of, in case of Oracle, the network. So where is the stake being put? How can we incentivize actors to play according to the rules? And obviously often we do not see it fully, but we also trust the operators. So who holds the private key, who is actually in control, and how can you execute the control in the system. Like if you'd like to censor the Oracle, or if you'd like to turn off the price feed, then who is actually the person who makes that decision. So in my view, there are this different level of trust.
Yeah, and it's a great point you make that there are trusts at different levels. We can always have economic trustlessness, but then maybe everything runs in AWS. So, you can argue, yeah, maybe defeats the point. But Daniele, I'd like to pick up on something you mentioned, which is, a lot of the ways Bitcoin is bridged onto other chains is via centralized custodians, and we're making a lot of trust assumptions there. And here we're bridging something that is on another blockchain onto another blockchain that don't really natively speak together. So this kind of makes us think of, how we want to bring real-world assets on-chain.
Yeah, sorry.
Go ahead.
No. I mean, it's a great parallel because effectively you can think of like the meat space as a blockchain on its own. And so, bringing real-world assets or bringing Bitcoin on an EVM chain is virtually the same exact thing. Slightly different, but like it's effectively like the essence is the same. I think the real-world assets problem on the blockchain is super important, simply because we now have this. We can just basically agreed upon standard for token transfers, and now that means we are free to tokenize anything that we want. Not that people couldn't do it before. I think we had a conversation earlier this week where we talked about like airline miles. They've existed forever, but they've just been non-transferable, right? You'd have to get all the airlines together to create a standard for transferring airline miles across each other. It's been a complete nightmare. But now you can, right? And now you can tokenize anything you want, so you can tokenize real-world assets. Like, if you have some like supercar sitting in a garage, you could probably go to a bank and borrow money against your supercar, and I'm sure the bank will do its due diligence and require some sort of guarantees on the storage of the car, blah 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 blah. But like, we could make that more democratized, right? Like you can why have just the bank be able to like quote unquote buy the tokenization of your car in exchange for other assets, as opposed to not letting like anybody to do that, right? And that opens a lot of opportunities, not just on the like supercar owner borrowing money on his car, that's silly, but it creates opportunities also for creating like inflation hedge portfolios for like retail users. Like imagine you get 1 million people together to collectively buy tokenized artwork, tokenized cars, tokenized jewelry, tokenized real estate, right? Like none of this is going to be decentralized. Like it's not the point here isn't the decentralization. It's the ease of transfer, the ease of like the usability of it, the technical implementation, and possibly the permissionlessness of it, which is in quotes here because you're still trusting whoever is the warehouse holding the assets, right? So we're gonna have to like evolve in that space, and that's one trust assumption. And then the other one obviously is gonna be like the oracles that like effectively quote the price of these objects. And who do we use for this? I mean, we have in the traditional world there are auction houses and high-end what was it, Chronex, like the big European online reseller of like luxury watches, for example. Like I think I see a future where we have to like onboard effectively these like old world infrastructure onto the blockchain for Oracle purposes for these kind of things. And I think these trust assumptions are fine. Like it's yes, I mean, there's a lot of things that can go wrong, but I think through iteration we can get to a place where there are reasonable trust assumptions for a large swath of the addressable market, and we can create value out of that.
Yeah, I would like to add there. I think at the end of the day, I think it's true that you will never get around some trust in the system about these things, because when you have real world assets, then you have some party controlling that real world thing, and whether there's actually the connection to the tokenized form of it sort of kept alive, or whether it's ignored at some point and he just sells the car for himself, whatever. You need to trust there, and there's different notions of trust, but what can be maybe more or less objectified sort of is the belief that something happens, so that's maybe some probability that can be a bit objective. Maybe you can learn it, but then trust has a second component, which is, okay, what happens if it goes wrong? How big is the damage? Like the risk part of it, basically. And whether some risk is acceptable to a user or not is really an individual decision. You can never create an objective measure for that, because it's just subjective decision. So again, we believe very much that you cannot take this subjectiveness out of it. So the best you can do is make it really as transparent as possible. So who's that warehouse, basically, that keeps that car? That needs to be very clear. And there should be some ID mechanism that makes it as certain as possible for a user to see who that is and whether they want to trust that entity or not.
And I believe that technically we pick up the low-hanging fruit with the prices for tokens, which is quite simple, very standardized, simple format. We know the infrastructure, and we also managed to fail a few times doing the simple task. And the real-world assets is really fascinating challenge, because the amount of data that will need to be attested and put off chain is much higher, a few order of magnitude higher, and there's the question whether you only store the validations, attestation. It would be awesome to have a full evidence, fully transparent for people to independently check it up. So yeah, I'm just waiting for more standards and let's say more discussion to be made. How can we agree on how we want to put the real world assets on chain?
Yeah, and I would also add that I think it's a great opportunity for the big players in the traditional space, if they want to move to blockchain stuff like that in a reasonable way that makes sense. I think this is a great place to start, because like we said, we all agree here that if you're going to interface with real world assets, you need some level of, there's some trust. You can't remove the trust. It's impossible, right? So it's really important, I think, as a space to coax the trusted entities of the traditional world to come onto the blockchain, because you basically import trust into your system, and that's a meat space asset that you can import onto your blockchain, and it has value, right? So effectively, a blockchain's value is a function of its network effect, the users on the blockchain, the native value proposition, things that are natively native utilities that don't exist anywhere except for your blockchain. Think the hypothetical of like metaverse games, what metaverse games want to be, right? You come to play in the metaverse kind of thing, or you import assets into your space, like a country. A country imports goods and products, right? We can import trust from the real world, and I think that should be, in my opinion, a good selling point for these traditional old world players to enter our space and help us close the real world to crypto loop, instead of just using these on and off ramps that are just for buying and selling a token. It's to go back to the real world space. At that point, you activate a whole host of other recursive connections with the real world that would add, I think, an exponential amount of value to the crypto ecosystem.
And when you see this happening, do you see this being integrated in DeFi as we know it today, or do you see a schism appearing where we have the use of permissioned real-world assets in DeFi, and a permissioned DeFi, and a permissioned DeFi? Do you see them merging, or do you see two separate strains emerging?
I think it's going to be like a blur. I think there's going to be a continuum between them. I think there's going to be, for sure, super permissioned DeFi. I think or just permissioned blockchains. Effectively, there's a renaissance coming back. On Polygon, there's they have the whole Polygon Edge project, the blockchain as a service, create a standard for blockchain rails that are natively compatible in terms of their scripting language with more permissionless chains, and then that's obviously on the fully permissioned side of the spectrum. And then in the middle, you can have DeFi protocols that manage both assets with different degrees of permissionlessness. If the U.S. government were to come out tomorrow and say that USDCs are only redeemable by fully, KYC entities, and I don't know, somehow like do some magic whereby like the token isn't usable anymore, for whatever, something crazy, right? You would see immediately that there's a different level of permissionlessness between a token like USDC and a token like USDT. Even though USDT has a whole host of FUD and uncertainty that swirls around it, those two assets fill very different niches. And I think that's been in the space for a while, and I think we're going to keep carrying that on into the future as we start developing more complex and more abstract assets.
Right. I would also say that, at the end of the day, it depends on how you define DeFi, right? I mean, when you add more trust components there, then maybe people say, okay, this is not DeFi anymore because it's not trustless. But then we have already had various discussions that, okay, DeFi often uses price feeds, which are also vulnerable to certain things and also require trust. So maybe DeFi was never really completely trustless. And then when you talk about permissions or not, I think it was, there's a spectrum of things. So we are part of initiative that is being built up right now. It's called the Africa DeFi Alliance, and we try to separate some things that are traditionally like bundled together. Like, okay, we have liquidity pools with the purpose of giving loans to like small businesses in Kenya particularly, but also other places then, where there are maybe different forms of guarantees for these loans. Like, for example, there are advance payments for payouts that are to happen anyway 2 weeks later or whatever, and then there's an entity like a gig worker platform, for example, which can guarantee for these loans. And the liquidity pool, instead of relying on a collateral, accepts that guarantee, and then liquidity providers, they can make up their mind, right? Okay, do I trust this guarantor or not? And put liquidity in or not, or maybe only a certain bounded amount because that's their personal risk willingness. And then that sort of structure we are building up is sort of a template with predefined interfaces, but how people want to instantiate it, that's up to them. And also who are the sort of whitelisted platform off-takers is also up to them. So in that sense, it's unpermissioned because anybody can basically create such a pool, but then a pool might be permissioned, at least in this one regard. So there's a spectrum of permissionness here, and then there's also a spectrum of trust that is required for any of these components. So maybe a different liquidity pool uses a collateral pool, which is like using the traditional over-collateralization, and then you don't need that trust, that particular trust, but you still need maybe other trust, like, okay, if you have price feeds in there, then you still need to trust them, right? So it's really a spectrum, and again, I think the only way to really solve it in the decentralized blockchain way is to make it all very transparent.
Sorry, if I add to this point really quickly, I think, and all this stuff I think is totally fine because it allows us to hybridize the different aspects of what's permission and what isn't, right? Because it's like when something has a different level of permissionlessness than another asset, it comes at some trade-off, and these trade-offs may be valuable in certain circumstances rather than in others. So like I think there's space to create assets that are like a hybridization of different degrees of permissionlessness of underlying assets that they track, for example.
Yeah, I totally agree. So the being permissioned is like an interim step because before we can, from the compliance or regulatory reasons, can fully open the network, but at least if we can start building that on the public blockchains, first gatekeeping the access, like a segregated pools, and then we can slowly open it for the fully KYC or even for the wide public, that would be awesome. So we do not get siloed with like a separate sign chains before we can integrate. So yeah, if we need, we should start being permissioned, but let's have in our mind the long goal of being fully open and decentralized.
I would even offer to just not use the word decentralized anymore for a year. Can we just all agree to not use the word? Like have like some like disco foghorn that plays really loudly whenever we use the word. No, because I think it's really important to I get that the essence of your point, and I fully agree with it. But what does it mean for the average user? I think is what's really confounding. Like you said before, like should we even be calling it DeFi? I would agree that we shouldn't, for example, but the name unfortunately has stuck,
No,
right?
actually, I don't say that we shouldn't. I mean, actually, I think we should, or at least I wouldn't dismiss decentralization as a term or as a concept. I mean, for me, it's like an ideal to strive to. Maybe it's impossible to fully reach, but I think it's still a worthwhile goal to decentralize as much as possible, or even to make everything as trustless as possible. But I think we need to see that, okay, it's not possible to do it 100%. And we just need to be clear about that and make it transparent, make people understand what's happening, and yeah, instead of trying to say, okay, we are fully decentralized when we are really not, and then people run into traps, sort of, because they don't really understand and they get wrecked and whatever.
No, I mean, I get that. It's just I think that the average person doesn't understand this nuance that you just explained, and that's the problem. I think that's a problem.
But I think the solution is more education, more information,
100%.
rather than trying to like sort of ditch it completely.
So from my point of view, I meant more like accessibility. So if you can keep it open for the wide public, for example, if you got this supercar in your warehouse, will anyone from all over the world will be able to participate in buying like a chunk of that? If we can keep it open, accessible to everyone, as an end goal, that would be really great.
Right. For me, this is permissionless, which is different from decentralized, though. It's like they're two different things, in my opinion, and like it'd be funny if, I think the better word for DeFi should be like permissionless finance, and then which may or may not use decentralized money Lego blocks in its substrate, but like the whole space as a whole is not decentralized because, like we just said, you can have different spectrums of how much something is decentralized or not, right?
Okay, I don't know, maybe I'm nitpicking, but I would say that, okay, if it's not decentralized, then it's permission per se, because not decentralized means it's prone to censorship, and basically you are permissioned to use it as long as the party who could censor it is not censoring it. So in the sense it's de facto permissioned then, but okay, maybe in practice that's not such a...
No, I appreciate the nitpick, and then I think, but that just shifts the question to like, has the thing proven its decentralized character? Is it true that it can't be censored, like you just said? And all these things are, I think it's like you said, this is nitpicking. We're going deep into the weeds, and the average user doesn't care about this. But I think that what matters is that for a lot of things that are going to be possible in the DeFi space in the coming years, I think it doesn't matter that much. And so the buzzword itself just adds confusion, in my opinion. Like, especially like we were talking before about like real world assets. Like, there's nothing decentralized about real world assets. You know, it's just do we have a rail that allows as many people as possible to access those assets, whether it's censored or not? I mean, obviously, like you said, the aim should be to have it to be as uncensorable as possible. But like the majority of like social engagements all exist in a trust-based, non-censorship resistant framework, and I think it's fine to import those social structures onto the blockchain. And I don't think there's anything fundamentally wrong with that. This doesn't mean that everything should be. It's okay that every token, every protocol, every product should like not care about being censorship resistant. But like it's not necessary to push, I think, this aspect so hard to the point where like any product has to effectively advertise quote unquote decentralized capabilities of some kind, because otherwise it's not taken seriously, because they're not using the right keyword to come into the party, right? Like, and I think this also puts more centralized big old world entities like kind of in a weird spot where like, okay, well, so I can't join the party because I'm not a decentralized a structured business, for example, and it's like maybe it would make the space a little more accommodating, for.
Yeah, but it's also good to remember sometimes why we came here and did all this stuff. I mean, of course, nobody wanted decentralization for its own sake, because I mean it's less efficient than centralized systems, etc. But the censorship resistance, for example, is a thing. And I mean, you can say, okay, people don't care whether something is decentralized or not, as long as it works. However, if sensor steps in and makes something not work, then people do care, right? Because it doesn't work anymore. I mean, same thing with like supply chain optimization, which is extremely fragile, and then COVID comes around and everything collapses, whatever. So people didn't care, they just cared about cheap prices, and then suddenly everything doesn't work anymore, and or you have got a supply shock and everything gets expensive, and then suddenly people do care a lot, right? So people only don't care as long as it works, but then when you actually run into problems, people do care. So I think it's probably worth reminding of that fact every once in a while and saying, okay, there's actually some utility for us to do this, which is simply increased resilience, less risk for people to have their funds disappear on the platform because it's just gone or whatever.
So speaking of increased resilience, something Daniele you mentioned earlier is, the role of these traditional players that can act as oracles and bring information on chain. So is this a place where you guys feel that third-party oracles can really shine and try at least decentralize a bit of the way this data is brought on chain by querying different sources? And in what scenarios do you feel that third-party oracles should be used for bringing off-chain data on chain, real-world assets? And when should first-party oracles be used for these cases?
So if I may start, so it's definitely like first-party oracles when you get this monolith system. It's going to be much more efficient, performant, it's easier to manage, it's easier to deploy, and lower cost. Definitely, it's like a tight coupling. But also there's like a question whether the current institutional data providers are skilled enough to manage the complexities of blockchain, for example, the different gas prices, the accessibility issues, whether they got the skills to run like a DevOps on chain. That's why we got these third-party oracles who get through many issues, many crises, and they made the infrastructure more resilient to the situation when the network is too congested or down, etc. So I see like it's probably with third-party oracles, it will be more expensive, but also I believe it could be more resilient, and yeah, that's my view.
I think it depends on where you need the resilience. Like, okay, if you just need redundancy technically because you want to avoid the thing being unavailable because some node goes down, then, I mean, you can also have one party running multiple nodes, right? Or using multiple cloud providers or whatever, but it's still controlled by the same party. So you have redundancy technically, but you don't have it control or trust-wise. So maybe there are use cases where you want that additional layer where you have multiple parties queuing multiple data feeds, or maybe even just one data feed, saying because you need, I don't know, some sort of increased guarantee that you're getting the correct reading. Some people would probably disagree here, but yeah, I don't know. I think there are probably use cases where it's valid to have third-party oracles for that increased, yeah, not redundancy, but yeah, sort of distributed trust here. I think, yeah, it depends really on the trust model that you want for that particular use case, and whether and which off-chain parties you trust with what kind of job, basically.
Yeah, I agree with all of that, especially because in the case of like real-world assets we were talking about before, like luxury goods, like you effectively would have to like somehow tap into the feed of all sort of sales happening all over the world for those kind of assets. So you have both, I think, a problem of accessing all these markets in terms of like pricing information. That what you said about the redundancy in terms of like the what's offering the feed to make sure that it doesn't go stale, I guess, in a sense. But then also, I think you also need a problem. You have a problem with how do you make sure that these prices don't get manipulated, right? And I think this is a space for, it's hard to say, it's a space for regulators to come in. After all, I mean, if real-world assets are going to be monetized on the blockchain, tokenized and monetized on the blockchain, it's like the whole like tax framework on the government side is going to become a lot more aggressive towards all of this. And then at that point, if they're going to go down that route, would it be fair to expect them to also like somehow like be guarantors for the veracity of actual sales of these objects in the open market? Like should there be wash trading rules against buying Rolexes or buying Monets? Yeah, I mean, it becomes a much bigger problem, I think, because after all, you're interfacing with the real world, and the real world comes with a lot of problems.
Yes, but if you call for regulation, that basically means that you think that there's not a mechanism which can by itself incentivize people to behave as intended in the system. And yeah, I mean, at least for me, that's the point where you need regulation, basically, because you cannot come up with market rules that make people behave in the way you want them to behave in that sense. I don't know, I wouldn't be so quick to call for regulation. I think we haven't really tried much yet when it comes to economic mechanisms. I think there's much more room for experimentation. Okay, yeah, people get burnt along the way. That's a bit unfortunate. So as I said, it would be great to communicate the risks better. But I would also say that, okay, if people actually want to take that risk, then let them.
Absolutely. 100%. No, first of all, I wasn't calling for regulation. I was asking whether there would be space for regulation in this kind of space. I'm all for just iterating best practices until they fail, and letting people wreck themselves as a fee that we pay to build something better and more resilient moving forward. I'm all for it, and I'm all for people taking whatever risks they feel like taking, as long as, like you said, the risks are properly disclosed. But this again also ties back into like the regulator problem, because the regulators want to make sure, in principle, that all risks are accurately disclosed to retail, and like there is no clear line about like how far can self-regulation go? You know, like obviously ideally we want self-regulation to be the entire standard, right? And where people behave well and whatnot, but like often that breaks at some point. And like I said, I'm not saying that I'm calling for regulation to come into the space to like monitor all these tokenized objects. Also, because which regulation, like which one? Like it's like what the U.S. government, the European Union. Okay, so I'm going to run my protocol in like South Africa. So okay, and anybody from the European Union can access my protocol. You know, like it's like that's the thing. Like the rails are such that if the underlying let's call it the underlying settlement layer, just to keep it as agnostic as possible. If the underlying settlement layer is decentralized, like the real decentralized, not with the quotes, right? Then you can be okay with regulators trying to attack the space, because they either add value to the space or users move. And practice regulatory arbitrage, right? And this goes back to what you were saying. Like I'm all for regulatory arbitrage. I think that's what we want, because it puts regulators in check also, and it forces regulators to act positively towards the space.
Okay, some very interesting points here being raised. Do you have any thoughts on the role of regulation, Jakub, and how it relates to how data is brought on-chain?
I think we brought a really interesting question of bringing the real-world asset, because it's quite easy from a technical point of view if you are dealing with digital goods or with synthetic assets, and when you enter the world to the real-world asset, then definitely you need to apply yourself to the legal framework. Like if I'm buying, let's say, a representation of a luxury good, then how do I enforce the ownership at the end? So I'm not sure if this within the scope of oracles, because usually we see like a one way how to take the real world data and inject into blockchains. Then you get an opposite situation when you actually have a blockchain transaction and want to see the effects in the real world. So then definitely some kind of regulation or legal enforcement will be needed. But that's a good question, whether it's still an oracle or maybe we're opening another area to discuss.
Or a museum. Can a museum be an oracle? You know, like or a guarantor for the safety of the assets being tokenized. Also, you know, there's so many ways this can evolve. You know, and I find that really fascinating.
For the people who believe in that museum, I mean, trust that museum to do so. Sure, but yeah. I mean,
like what if, like, I don't know, just completely random here. Like the Louvre opens a new wing okay, of the Louvre based in Paris. And it's actually funded by a DAO, right? The financing for it comes from a DAO that invests in real world assets that are stored at this wing of the Louvre in Paris. Obviously, you trust the management of the Louvre to properly execute the storage of these objects, which, by the way, and you could also generate as a cash flow because people can go visit these objects and see the objects in principle, you know? And like at that point, this museum becomes an integral part of like the whole DAO operation, which kind of connects to what happened this past year with the Constitution DAO in the United States, the DAO that tried to buy that copy of the U.S. Constitution and then failed. And like in their roadmap was if they were going to pull off the purchase, they had already lined it up to put it in a museum, which would have been a collaborator of the DAO. It's just I think like there's just so much fertility in the space for interacting with all these entities that don't have to be financial entities. They can be really like the entities that have the most trust, right? Like the Louvre is a museum that has a brand, it has a trust, and this has value.
Yeah, okay. So in that particular case, there was a second layer there. I mean, that failed, I think, partially because the plan was public, right? So it was publicly known what they were going to bid. So that enabled the counterparties to thwart that whole plan. But so yeah, they could also say, okay, do you trust the mechanism, and can you trust the mechanism if it's too public? I don't know, but okay, that's maybe a different tangent here.
No, nice example with the Louvre. I think also this is maybe a good time to open up to questions, if the crowd has any. Yep. Okay, if you can shout.
Yeah, I'm not sure if I need to repeat. Do I? Okay. I wanted to say that I fully agree that we need another term for it. Just like you mentioned, I think calling it decentralized finance is very, very weird because it's just permissionless finance, like you mentioned. And I wanted to ask into the round what people think if we need to make protocols, more like marketed more in that way, or like at least be explicit about it. Because the first example that comes to my mind is if you look at Aave or Compound, you have two very different ways of marketing it. If you look at the documentation of Compound, there's not one mention of the word decentralized. And if you look at Aave, it's literally everywhere. So yeah, your thoughts on that?
I mean, you're preaching to the choir. My answer is yes. Like I said, foghorn. Every time someone uses the word foghorn. No, I want to add one more thing to what you said. The permissionless also in principle has a nitpicking caveat to add to it also. Because it's permissionless in the sense that anybody is free to deploy some smart contract construct on the rail, on the blockchain, right? In that sense, it's permissionless. The user itself, the asset itself isn't necessarily permissionless depending on what the asset is. Like it could be like, you know, is USDC a permissionless token, for example? One could say it is in de facto because anybody can access USDC on the blockchain, but in practice, it's subject to regulatory pressures that other stablecoins don't have. So there's like a degree of grayness. There's a degree of grayness there. I would just focus on the fact that the space is permissionless in the sense that like anybody can build whatever the heck they want, right? And like that's what makes a space beautiful. Just build. You think there's a value proposition for something? Build it. If it's valuable, it lives. Like that's what we do. That's what we iterate. We evolve we evolve blockchain products until something sticks, right? And along the way, we developed really, really, really beautiful things. Like when Uniswap v2 came out, it was like beautiful in its simplicity. Like it has all its defects and stuff, like in terms of like manipulability. But you know, nobody stopped you from building an AMM, right? And it's beautiful because of that. And I think that's the real. That should be at least it is for me the real allure of the space, without needing to go into buzzwords, which have to be qualified to give them meaning, in my opinion.
Yeah, can I say, okay, when you say we should put up more information, then of course the question is who is we? But I would say that yes, I mean, an author of a protocol should definitely put up more information than is typically the case today. For U2, I mean, as I said, we are building these trust signals where users can hopefully see, okay, your friend so-and-so says Uniswap is cool and this liquidity pool is legit and it's not a scam, etc. That's cool, but how do you actually get there? People need to know how DApp is supposed to work. They need to know which contracts are invoked when and how. So the best thing, of course, is you can actually read Solidity code and verify it yourself. But to do that, you need to know which contract, etc. And nowadays, it's actually pretty difficult to go into a random DApp and find out what is actually happening. So it involves digging around in the browser console and finding GitHub repositories and finding the audits, verifying at the auditor page that it's actually a legit audit, etc. So it's actually really involved to do this kind of verification. Even then, if friends then can rely on your opinion, yeah, it's very difficult to do this, and would definitely help much if DApp authors are more transparent about this stuff, put the information up front, how is this supposed to work, are you technical, do you want to look into it, then look here. Of course, you still need to verify it then, yeah? I mean, it could be a scam. They could send you to Compound repository and they have some other smart contract running there. So, but still, there's definitely ways to make it much easier than it's currently the case.
So I really like the example of Aave that you brought up, because Aave got like two pools. One is like fully publicly available, permissionless, when anyone can enter. One is like gated to the users that get through KYC, so your funds are not mixed with others without KYC. That's an interesting question. Like you got two decentralized solutions, but one is permissionless and other is not fully permissionless, and it's got its own advantages and benefits. So yeah, we got DeFi and probably got PeFi as one level above.
Thanks.
Thanks for the question. Anyone else? Okay. Well, in the absence of further questions, maybe if the speakers have any concluding remarks or any spicy takes or any thoughts they'd like to leave us with, yeah, please go ahead.
Yeah, my thing is just to advocate for more power to the users, more information to the users, make it easier for the users to understand what's going on, either themselves or via others that they trust. And I think, yeah, that also connects to UX issues, basically, which, yeah, also have a lot of room for improvement. And, yeah, that relating to oracles, extending to, okay, who are your data feeders, etc. So, yeah, more power to the users.
More power to the user is a good note to end on, unless you have another point.
Well, I mean, to piggyback on what he said, which connects to the general meme of do your own research, right? Like we should make do your own research be as simple as possible for the user. So in the real world, the business discloses all the ways their business model can fail. When you look at their public like papers, I think it's called the US is called the 10Q. I think I don't take my word for it, but they're basically these like public disclosures where you show like your cash flows and everything and all your financials, and then you also say what are the risks to your business model that you see coming up, right? Like Coinbase was really famous recently because they had to disclose that in the case of a bankruptcy, the coins that they hold, the coins that they hold on behalf of users as a custodian are in principle liable to be paid to whoever they owe money to in a bankruptcy filing, right? Like that is like a disclosure of a risk that users have on that platform, and it's very common in the traditional space. It would be nice to see it become common also in the DeFi space, where like a protocol launches their project, and then you have your team tab, your research tab, your go to the app, and then you have an extra tab like how you will lose all your money, how you can lose all your money, right? And just have that be like a standard, maybe not exactly that, but like where you say like all the risks that we as a team think that you as a user are putting yourself to use our product. If we could turn that into a standard, I think that would be a massive value add to the space. And going back to the regulatory discussion from before, it would lead credence to the self-regulation of the space.